Well, hello traders and investors. I'm LA Little. This is your daily NeoTA wrap. Take a look at these markets, and we're doing it from a neoclassical perspective. We're looking at supply and demand on the charts. We're looking for tests. We're looking for the resolution of those tests to give us information about where this market's going to go. Individual stocks, whether you're doing it intraday, you're doing it over multiple days, swing trading, it doesn't matter. It's all the same, right? We've built these tools in such a way that we can look at it the same way no matter what our time frame. I do the show 4 times a week, every Monday through Thursday, broadcast every 10 o'clock Eastern time. It's archived on YouTube, and it's under the channel LA Little. If you want to subscribe, you can reach up there in the right-hand corner, hit the subscribe button. Anytime I push public content, you'll get a notification letting you know it. Red pretty much across the board tonight. Small losses across the board. Folks, at this point, you got, 4 or 5 days left in the year. You got no volume. You're just kind of drifting around. I don't think it means much. Your oil was down 2%. You had inventory numbers come out a little bit heavier than expected. I don't see much else out here, really. Let's look at the charts. Let's spend a little bit of time looking at these charts and looking at maybe some of what we do, and we'll look at, I'm going to look at Tesla tonight, and we'll look at that together. As far as the indexes themselves, if you look here real close, you got a day, and I'm on the S&P 500 on the daily here. You got a day where you didn't hit the tops. You get up underneath yesterday's bar, and you could kind of hang there. So what, right? I mean, it doesn't really tell us much. The bar is here on this one. This is the bar. When you break over one side or the other, that's when it's going to matter. That's your test, and the S&P hasn't tested it yet. So when it does, then we'll know something. Right now, you just go in the direction of a trend. If you don't have anything telling you anything, right, then you're simply going with the trend. Everything's the same. Nothing's changed. And that's the way it is with that particular chart. Let's look here at the NASDAQ. Now, what does the NASDAQ do? Low yesterday, 54.71. You close just underneath it. Again, same sort of thing. Again, I don't think it tells you much. I'm not going to try to split hairs on that one. NDX, let's see if there's anything there. And what do we got here? Now, this one's slightly different. And this one's actually kind of bullish. Or slightly bullish. I mean, nothing's hugely different right now. This one you get under back over yesterday, got a little less volume. That says it's going to just try and test a little bit higher tomorrow. So that one gives us some sort of an indication. Let's see what the Russell is. Inside bar, doesn't tell you anything. Okay. Let's look over at the currencies, because we actually had, yesterday we had a test failure on the UUP. I told you about that. And that's why we looked at gold yesterday, see what it looked like. And it did pull back. And a lot of less volume. Now you're kind of coming back into this gap area. This is probably going to try to retrace back into this bar. That's probably what you're going to see here. You're going to try to retrace into this bar. Right? Now that will be the area that, you've got that, and you've got this swing point high that was broken. And so that little zone, and I'll just draw it in with a color here, that little zone right there is where you got to expect the buyers to show up. That's the test on this one. Every one of them gives you something to look at. And what you do is you look at those things that are important, and then you see how it tests back into them. So now that this is trying to pull back, let's see what the euro looks like. Yeah, see, the euro is going to do, it's the exact opposite, right? You get the bearish retest region here, and you have the big bar, right? This bar, you got the big bar there. So here, it's the exact opposite. And the charts show it to you with the red. It's this area right here where you expect the sellers to show back up. And while we're here, let's look at the yen and see if there's anything on the yen. Not really. The yen doesn't say much. Okay, so that's the currencies. That should, theoretically, that should help the metals markets. The ones that are stronger are not the golds and silvers, it's the minerals. But let's quickly take another peek at the gold, and still nothing there. And I'm watching this gold because you're almost into a trade here, right? Setting up. Now, there's some of the individual stocks I was looking at today, some of those have already set up. and maybe we'll look at one or two of those tomorrow. But as far as these markets here, they haven't set up, so there's nothing there. Let's pop over to Tesla. So I want to spend a little time here and show you one of the mentors. She's been pointing this one out to me. She brought it up today again and said, you know, she's watched this for a long time. I don't know how much she's traded it, but I wouldn't say she's in love with it, but she likes the opportunity here. And I have to say I agree with her. So let's take a look at it together, and I'll show you what we were looking at today when the two of us were looking at it together. So Tesla. Now Tesla, you know, and I'm going to start with the monthly chart just to show you where this thing came from. Now you can't argue with what happened, right? You had a multiple, and you can't quite see it on all the time frames, but you can definitely see it here, and it actually happened on all the time frames. This is where it broke out, and this was back in 2013, and I had been watching it for that $40 area. That's where this was. Let's see, it was 40, yeah, $39.95. When it broke over that, that was a breakout on multiple swing points, and man, did it ever get the juice, right? This thing went from 40 bucks straight up to 175, almost 200. I think the number was almost 2. It's 194.50. So you go from 40 to 194.50. You do it in 5 months, 6 months, half a year. That's a huge move, right? You get that kind of move, and then in this particular case, you get the big pullback here, right? And then you juice it back up and you make new highs. Now, there's nothing wrong with that kind of action. It's just that when you make that kind of a vertical move, you're going to have to work it off, and that's what this thing is doing, right? If you look at this from the perspective, okay, you made a huge move. Now what are you doing? Well, you're working it off. You have this big range now, right? So you have this huge range on the monthly chart, and right now that range is going on about 3.5 years. It's slowly working off all this big move, right? It's consolidating, and it's going to probably pop higher again. And inside this, you actually have a secondary range, right? A little tighter one. It's right up inside there. And you could probably actually take that, if I drew it correctly here, I'd probably take it up just a little bit higher, right about there. Now, so many times, and I've pointed this out over and over, so many times what you're going to see in these ranges is you're going to see this be about equidistant between the top and the bottom. And again, this is about that. So as long as it holds this top end of the range, which is what it's done multiple times, right? Just look at it over and over again. It even popped under it and held it on the close. Over again here. Test it again here. This thing is eventually going to consolidate long enough where it's going to take off and do the same thing again probably, right? And so you could take and measure that in a couple different ways, right? But you could take this, which was the breakout, and take it to there. That price is from 27 bucks up to 194. Now, you'd have to throw the percentages into a spreadsheet and figure it out. But whatever that percentage move is, if this low holds as the low, which right now looks like it will, take this percentage and project it right there from this price point. That's where this thing wants to go long term. And I suspect when it does it, it's going to do it just like it did it here. It's just going to take off and not come back. And you're going to want to be on that ride. Now, one way to do it is just sit and wait until it gets up here. Another one is to say, hey, it's a range trade, right? It's a one-way range trade. What do you do in those? Well, you buy towards the bottom end of the range. And that's kind of where it is right now compared to the top, right? So one could take a position there. That's the long-term chart. Pull it down, look at it. We'll just go backwards. We'll go to the weekly next. If you look at the weekly is actually showing a little bit of juice. And what you have here is that's that low that we saw that actually flipped around and held on the monthly. That's the A point of an ABCD structure that now measures back to here. And if you take and project that up, right, that percentage gain here, tacked on from there, that percentage up here gives you the projection if this thing actually breaks over this top. Now that's a big if, right? But that's the ideal because that's that top of the range we were talking about. In between that, just take the range, which is essentially here, and the top, which is up there, and take those price differentials, right? In other words, if I'm interested in a stock like this, and I take these two price differentials, is there enough here to play with? In other words, even if it takes it, let's say, another year to break out, is it worth me buying towards the bottom? Let's say I buy 200 shares here, and I flip 150 of them there. So now I've pocketed 150 shares worth of gains at whatever I bought it at. Let's just say I bought it today, and let's say I can get it out at 251. So can I make enough? That's $40 on a 200 base. Can I make enough to make this worthwhile? And the answer is yeah, because this range is big, right? When you get a big percentage range, you can trade something like that. And what do? You sell it. If this thing pops back down, you buy some more, you do it again, however long it takes, and you try to build yourself a base here so that when this thing does break out, if it does what you think, then you can ride that thing and you can have a few shares on top of it while you ride it. Looking at the daily here, big spike up today. You actually did an over-under today, but you didn't have the correct volume. So that says to me it's going to go up and try to test it again. What's it trying to test? Trying to test into here. As it gets close, what happens? People start taking profits. That's what happened today. So they get up there close and they're like, oh man, I got to take that money, right? We got resistance. They do, they pop it back down, but look at your volume. It's a little bit heavier than yesterday. This thing's going to flip right back around, go up and try to do it again. If it gets over it, then it can run to the next thing. So you pull your weekly back over and you see where the next thing is. And that next thing in this particular case is just a little bit higher. Matter of fact, you got two or three things here. You got this high, you got that breakdown bar, and you have this one. And so this whole range right here is going to be tough to get over. But if you get over it, right, then you can pop back up to the top of the range again, or at least you can pop back up into this area. And so for me, when I look at this, this is a pretty good looking chart. A chart you can trade, build a position for an eventual potential breakout that has some juice. That's neoclassical, folks. That's what we do here at TA Today. Have yourself a great one. I'll see you tomorrow. Good night.